From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 13, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. We are starting off this week here on Monday with a pretty quiet news calendar, but there are some other events that you'll want to make note of on your financial calendars as you go throughout the week. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USDCHF, the dollar franc. We're looking at the daily time frame, really two trends that we want to pay attention to. The previous black trend line, it was the fall, starting all the way back in January 3, the first real significant trading day of the year. We started this fall off, a downtrend along the black trend line. Over the past week and a half, maybe 2 weeks now, we've seen a little bit of a shift in that momentum where it broke back above that black trend line, started going up along the little short red trend line. So those are the two trends we want to watch. We broke above the long-term downtrend, and we're in a little bit of a short period of an uptrend. So we could be looking for opportunities in both scenarios, really. We've seen a little bit of a retracement back to the 382 of the black trend line. Back at the 382 at 1.0047. So we're holding underneath there as resistance, but if it continues to go higher, we could see the breakout and push even into the 50% or 618 all the way back up into the 1.0150s. So that would be up towards the top of the chart. Forex Black Book, again, still red this week, didn't change from last week, so we still have a bearish bias as that goes. So all of that means that there's potential that it can make a turn back down in the direction of the longer black trend line, but we also need to recognize the fact that shorter term we have seen some dollar strength, and this has pushed higher. And so that, again, I think that gives us some opportunity in both directions. Let's go ahead and zoom it in a little bit here on the daily time frame, and you can see the 100 period moving average. We're just above that this week. Last week we tested above it. This week we're above the 100 period moving average. And by the way, the parity level, the yellow line there in the middle of the pink zone, is the 1.0 level. So some interesting things there. If we're going to buy it in the direction of the little red trend line, let's go with that direction first. We're above the parity level, above 100 period moving average, and above this little red trend line. All of that would point to buying on any dips to the pink zone. And of course, there's no significant news on the calendar today, so that may be something that you might look for as you go throughout your day today, at least. Now, the other side of that is, hey, what about the downtrend? If we see a return to the downtrend from the 382, maybe we look for a short from the yellow zone. And I think both of those may be some viable opportunities. At least at this point, the past 2 weeks being bullish, I might focus it a little bit more on the buying sitting on top of the parity level. Take it down to the 4-hour time frame. Doesn't change any of that, just shows us again that we're just in that period. We're in that period of congestion between, let's call it, that yellow shaded area and the pink shaded area. So we want to make note and find our lowest risk and highest reward opportunities. Again, buying towards the pink zone would be a better idea. If you're looking for shorts, that would be the yellow zone, but you know your risk is, of course, a break back above the yellow zone or back underneath the pink zone. So buyers in the direction of red trend line, you're looking at the pink zone. Sellers looking for a reversal from the previous downtrend, you're looking at the yellow zone. Just be aware, a break above that yellow zone continues our current bullish pressure that we see here for the dollar franc. Just the opposite of that, euro. We see, again, the trend lines here. The black trend line, the red trend line. Again, if you're going to trade the little short red trend line, we're underneath the 100 period moving average. Then you're looking to sell resistance. If you're looking to trade the retracement of the black trend line, then you're looking to buy support. Again, let me take some of these older fibs off real quick. I'm going to take that one and this one off. Those are from the previous down blue trend line. Let's take Fibonacci of the black trend line, from the low of the black trend line to the current resistance high. Interesting enough, we're under the 382. The 50% is at the purple shaded area, so that's interesting. Let's take it down to the 4-hour time frame. Just discuss our opportunities this week. If you're looking to go short in the direction of our current momentum, which is the bearish momentum, you want to get as close as possible to the green zone, because at that point your risk is a breakback above it. If you're looking to go long, I really don't see any significant opportunity here until it challenges, tests, and maybe pulls back from the support at the purple shaded area in towards the 106 level. And you can see that back here on the left as well. So purple zone would be your very best opportunity to go long. Green zone, very best opportunity to go short. I would lean towards the bearish direction and the red trend line that we see here, getting close as possible to 106.50 for the euro dollar. Let's take a move over to the GBPUSD. This one's a little bit more difficult, I think. It's a difficult currency pair to devise the trend, because really, if you look at that black box, we're above the black trend line, yes, but if you look at this black box, we have been in congestion for a while. Let's go ahead and zoom it in on that black box. Look at this. We're going all the way back to, let's see, this big blue candle right here was back into January 23. So since January 23, we've been in consolidation, congestion, whatever you want to call this period. Last week we put this big black box there, but I also put a shorter one there. Let me see if I can grab a hold of a rectangle and put it right here, just so you know where I'm looking. Look at this area right here, and let me make it a box real quick, and I'll make it a different colored box. Let's make it this blue box, and let's make it a little bit thicker so you can see it. There it is right there. But if you take a look at that blue box, we have been inside of that primarily with a couple of spikes above it and below it, but primarily the candle bodies 1, 2, 3, 4, 5, 6, 7 days now stuck inside that little blue box. So we need some breakout here. It's kind of difficult to determine a trend when you're just stuck for 7 days in a little period between the green and the orange shaded area. We are underneath the 100 period moving average, so that would lead me to have a little bit of a bearish bias underneath the 125.70 level, and really only breaking above there gives you some upside with that direction. Back underneath the orange zone, of course, we'll look for it to go lower, but at least right now that is your current support for the GBPUSD. Take it over to the USDCAD. We had some pretty decent data out of Canada last week, which caused this currency pair to fall off. Interesting enough is this red trend line has been the overall direction for the past few weeks. Let's just call it this resistance here in the middle and this resistance here. So we've seen it falling off of there. But look at the pink zone. I put all these black circles on the chart to show you how significant this area right around the pink shaded area into the mid to low 1.3 thousands has been for this currency pair. Look at that. All these times finding support right around the pink and the blue shaded area. The reason I point that out is we're just above that right now. So difficult place to go short, truthfully, because of that historical support into this pink zone. I think as it approaches the mid to low 3,000s, you need to understand that there's the potential of support and reversal to go back up. That's what shows in history. And if we get any positive movement for the US dollar, this is going to make another turn higher, maybe even pushing back above the red trend line. For now, the trend is down, so if you're going to follow that, targeting the pink or the blue zone, you're selling on a breakout underneath what was resistance, what was support now acting as resistance. That's the yellow shaded area you see here. You see it was support here. We're underneath it. So for the day today, just the day today, we're looking at under the yellow zone, which is basically under 131, potentially targeting back to 30.55, 30.25, the pink shaded area. If it gets back above 1.3115, we're maybe taking another turn back higher in the direction of what has been basically a reversal of what has been the momentum over the past few days. So if we're trading this direction, the downward direction, right now is basically your time to do it. If you're going to look for a reversal, you need to get back above 31.15 on the USCAD. Let's make a move over to the USDJPY, the US dollar Japanese yen. Trend line may be your main focus here. The blue trend line is a bearish trend line. Forex Black Book is red, but today is our first time really challenging above that blue trend line. Let's take a zoom in here and take a look at this. We have the trend line coming down from the top, touching exactly the high at the top, touching this high in the middle of the blue trend line, and we touched there Friday into the orange zone, but now today we're above it. So that may look at a little bit of a clue to some reversal here as long as it stays above 113.45, 113.20. That's the orange shaded area. Staying above there, we may be looking for further reversal above the blue trend line. Back underneath it, that's of course the risk. So if you're looking for buying here on the dollar yen because we're above that blue trend line, you want to get as close as possible to the mid to low 113s, 113.45 to 25, somewhere towards the orange shaded area would produce lower risk and higher reward. If you're looking for a return of the blue trend line, of course, you're in an interesting area, the yellow zone, 618 fib of the last down leg here, just from the middle of the blue trend line to the bottom. 618 is 113.92, and that's right here at the yellow shaded area where we're currently finding resistance. And of course, a break above that 618 fib, we look for it to go higher, likely towards this green shaded area here, just above into the mid to upper 114. So definitely some area to concentrate your efforts on today is this yellow and orange shaded area, 4-hour time frame. As we get down there, you can really see the congestion inside that area. If you're going to buy it, you're looking at the orange zone or above the yellow zone. If you're going to sell it, you're looking at the yellow zone, possibly as an opportunity to take it back to the orange zone. I don't think we have enough fundamentals today to give us any confidence in direction yet here for the US yen. Take it over to the AUDUSD, Australian US dollar, uptrend. That's not too hard to see. The blue trend line there showing us the uptrend. But we're in a period of, again, congestion, indecision. We are not moving in the direction of the trend. The black box up here really shows us that. And the blue shaded area as resistance, purple shaded area support, and maybe the orange shaded area right in the middle is somewhat of a hinge point. Let's go ahead and zoom it in on that little black box there and take a look. We've had 2 times now. We were bouncing around in here, broke higher. Now we're bouncing around in here. We have not yet broke higher here on this currency pair. Let's take it down to the 4-hour time frame. Maybe this will make it easier to see how we're in that period of congestion. Clearly, the blue shaded area is your resistance, so don't buy it under the blue zone. Clearly, right now, 1, 2, 3, 4 times finding resistance into 76.80, 76.95. Not a great place to go long here on the AUDUSD. You'd actually need it to break through there before you'd have some confidence that it's going to continue that upside pressure. Until then, of course, we can have some hope for support here at the orange shaded area, 76.55, 76.40. But clearly, if it gets under the orange shaded area, you're looking at the purple shaded area as your next area of support. And of course, clearly a push underneath there. We look for it to go lower. So these areas are your areas to watch. If you're a buyer, you're buying the orange zone or waiting for it to reach the purple zone. If you're a seller looking for further reversal, maybe positive US dollar movement, then you're looking at the blue zone as your resistance high and possibility of low risk, high reward sales from the blue shaded area. At least at this current point, we don't have any significant movement yet this week to really give us confidence of momentum or sentiment yet here for this currency pair for this week yet. Let's take it on over to the NZDUSD. Of course, you see the trade going at the bottom of my chart. I've had that trade going since last week, of course. We took the short all the way up into the pink shaded area at the convergence of all the trend lines, and I'm holding one last little lot just to see if we'll continue to pressure lower. But it was a phenomenal trade from last week, really the trade of the week. We're under the red trend line, under the blue trend line, now we're under the black trend line, all pointing bearish here, at least for the time being. Let's go ahead. I want to take some Fibonacci off of the chart, some older fibs off, so we can put some new fibs on here. So no Fibonacci on the chart. Let's take Fibonacci from the low of the black trend line. Actually, I'm going to go to the lowest low on the chart to this current resistance high, the high we made last week, 382, 71.80. Guess what? That's right there at the yellow shaded area where we are currently finding support. Again, low to high, right there of the black trend line trend. We see the 382 right here at 71.80, right at the top of the yellow zone. So there's our support. Not too hard to see that for the past 3 days anyways. If we're going to go lower, clearly it would need to break under that yellow shaded area, and we'll call it 71.60 as the bottom of the yellow zone. 100 period moving average, of course, sitting at the blue shaded area where the 50% retracement level lives at 71.18. So the moving average sitting on top of that blue shaded area. Clearly, our resistance is the green shaded area. As long as we're underneath there, there's potential for it to continue to go down. So at least right now, terrible place to buy it. You don't want to buy it right now on top of the yellow zone. I mean, sell it, sorry. Terrible place to go short. You don't want to sell it or go short on top of support at the yellow shaded area. You need it to break through there if it's going to go lower. Maybe a place to buy it, but there's really no indication of a reason to buy it. No fundamental or technical reason to buy it. It's just sitting on top of support right now. 4-hour time frame. Take a look at this. We're just kind of bouncing around on top of that yellow shaded area. I think a breakdown 71.80, the 382 fib, the yellow shaded area. We're clearly continuing the downward fall towards the 7100 level in the blue shaded area for the New Zealand dollar. So your trade setup, if you will be the breakdown underneath the yellow shaded area for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.